Hello and welcome to the weekly outlook at XM.com. I'm Maria Pachordes, and joining me is senior investment analyst Rafi Boyadjian. We'll be reviewing the week ahead. So Rafi, flash PMI numbers for the Euro area and the UK are due on Wednesday. Now, forecasts for the Euro area suggest the recovery has been moderating in September, but in the UK, we could see another strong month. What reaction are we likely to see in the markets if the PMIs raise question marks about the recovery?
Well, Maria, so that's going to be the main focus. So where is the recovery headed in both the Eurozone and the UK? Now, in Eurozone, we saw some weaker than expected numbers in August. And so there's a real concern that the recovery there is really losing momentum. And so if that trend was to continue, that would raise question marks about the Euro rally, which has already, it's already appeared to have stalled lately. And also another concern is the rising number of virus cases across Europe and in the UK as well. So far in the UK, the recovery is doing slightly better. We have, of course, that is on the back of much bigger contraction in the UK than in other countries in the second quarter. So therefore, it's only natural we're going to see a stronger recovery. But there are problems ahead for the UK as well, because virus cases are rising there too. And not to mention, of course, Brexit. We still haven't seen significant progress. We've seen increased rhetoric coming from the UK in the Brexit negotiations. And although the talks are ongoing, they haven't actually broken down despite the tensions. And there's even some signs of progress in certain key areas such as fisheries, but still a lot of uncertainty as to how those talks will develop in the coming weeks. And not to forget that the job retention scheme in the UK will come to an end at the end of October, so things could deteriorate rather rapidly later in the year, both in the UK and the Eurozone. So if we do see weak numbers, then they could definitely weigh on both the euro and the pound.
Okay, turning now to the Swiss National Bank. It will have its quarterly gathering on Thursday. Do you think the bank will keep policy unchanged, as it doesn't seem willing to cut rates below minus 0.75%?
So that is correct. So I think now the SNB is pretty much done in terms of how much further it can cut rates in below negative territory. So really the main policy tool that in effect the SNB has at the moment is the exchange rate. So the SNB keeps a close watch on the euro-franc exchange rate, but lately the dollar-franc pair is also a bit of a concern because the dollar has fallen rather substantially against the Swiss franc. Now, you might ask, why is the franc so strong, despite the fact that we've seen improved risk appetite in recent months? And that's because the franc has been benefited on the back of the euro's euphoria, that optimism surrounding the European recovery. So that's been hasn't really worked in favor of the SNB. And so on Thursday, we're likely to see a repetition of the exchange rate warnings that the SNB or Chairman Thomas Jordan has previously, well, basically that's what he's been doing in recent meetings, that basically all it does is reaffirm the possibility of further intervention in the Forex markets.
Moving on to New Zealand, it was forced into a second nationwide lockdown in August, which left its recovery on shaky grounds. Will the Reserve Bank of New Zealand consider negative interest rates at this point?
Well, we know that the Reserve Bank of New Zealand is definitely thinking about negative interest rates. We actually had pretty strong hints from the governor, Adrian Orr, earlier this month. He hinted that the bank is looking at new tools to add to its policy toolbox, and negative interest rates is definitely one of them. The question is, will it come to that? And if it does, how soon is it likely to deploy negative interest rates? And of course, before they move on to negative interest rates, they could, of course, increase QE and see how that helps before resorting to more drastic measures. The problem is for New Zealand that although in the second quarter the economic contraction wasn't as bad as some other countries, the recovery is in danger because it had to go into a second lockdown in August, as you said. But even if that lockdown is lifted, which is expected to happen at the end of September, the outlook for New Zealand is rather bleak because those travel restrictions are likely to remain in place, and so that's little chance of the important tourism sector recovering anytime soon. And so there's quite a few things the RBNZ still has to consider, and it's quite likely that the RBNZ will go down the negative rate route. At least that's how it appears at the moment. But whether they're going to give any additional signals on that at the next meeting next week, that remains to be seen. So there's a good chance that RBNZ may disappoint in terms of fresh clues and the Kiwi, and that would be positive for the Kiwi.
And finally, over in the US, we'll also get the flash PMI report on Wednesday. How might the data impact the dollar, as it appears to be a rather quiet week in the US? And is there anything other than the data we should be watching?
So the PMIs will be the main focus as far as the economic releases is concerned. Now, we've already seen some signs that the US recovery is starting to outpace the Eurozone recovery. So if we get a confirmation on that from the September PMIs, then that could potentially lead to a bit of a correction, at least a short-term correction in the euro-dollar pair. On the whole, though, the data isn't expected to be a game changer. And this basically highlights the fact that markets are in a bit of a wait-and-see mode at the moment because they're waiting to see what's going to happen in the US elections. They're waiting to see when we're going to get a vaccine, and they're waiting to see whether or not Congress is going to reach a deal on a new fiscal stimulus package. Now, there's still a bit of a time window for Congress to reach a new virus relief bill. That could happen in the coming week. If it doesn't happen then that means the fiscal stimulus in the US won't happen until way after the elections. So if we do get a deal by Congress, then that would be negative for the dollar because it would improve risk appetite. As far as the elections are concerned, of course, we know that Biden is ahead of Trump in the polls. So far, that hasn't really worried the markets too much. But again, this wait-and-see mode could really trigger some anxiety in the markets. We could see maybe a bit of a sell-off. But on the other hand, if we were to get any vaccine news, any vaccine headlines, positive vaccine headlines, that would really be a major boost for risk appetite and negative for the dollar. So really anything could happen. So on the one hand, we could see just continuation of this consolidation we've been seeing in recent days, or we could really see major direction changes happening in the FX markets.
Rafi, thanks so much. And thanks for joining us at XM.com.